All right, let's get rolling. I got a couple other couple other people that joined here. So, first of all, welcome everybody. I appreciate you joining the live stream today. I'm going to call it Friday Live with Gains. I feel like I've gotten a lot of good feedback on hosting these things on Fridays. At least like the last hour of the market. And considering how it's the triple witching day here for the markets, we might get some interesting volatility towards the end, or not. I've seen these things fizzle out when they've been hyped up a lot. But there's about $4.1 trillion worth of gamma rolling off the books today. So that can create some sort of volatility. So with that being said, I kind of want to take a look at what happened this week and just sort of reflect on what the charts look like and also what to expect here for next week. So I thought it would be easier to just kind of go through the indexes here, starting with the S&P, and then go through Nasdaq. I'll touch briefly on like the Dow and small caps, but then also want to try to tie in some analysis with rates and like the dollar. Also to maybe look at some semiconductors, NVIDIA, and also just talk about some metals, kind of where that's at, like gold, and also with kind of where some commodities are at. And ideally, we'll feel free to ask questions, comment in the live chat, etc. All right. So let's talk about the S&P. So the big news today, or not today, this week really, is that the Fed definitely cut rates by 50 basis points. It's what the market expected. There was a lot of pressure. People say it's not politically motivated. I don't really know. I don't really care. I guess all that really impacted the markets is markets jumped about 2%, 3%. That's not a lot. Typically, when you see rate cuts like that, especially significant rate cuts instead of just 25 basis points, that's not necessarily bullish. And usually, when the Fed starts cutting rates, that's when you typically see that that markets or equities at least are on some shaky ground. So just looking at the charts here, looking at just the S&P in general here, I think what's playing out here, if we zoom out, let me do the 2 hour. So if we're looking at the 2 hour here, kind of what we're seeing is this stair step sort of motion here. And the stair step is typical of like an ending diagonal or expanding diagonal, megaphone pattern, whatever you want to call it. There's always a couple different scenarios and names and things, but what I'm looking for specifically is volume here. So we did see a lot of volume back in April, and this has been just a monster pattern, like a monster long-term ending diagonal. If we look at the daily level and zoom out, sorry, it's probably a little too much. You can see here how massive it actually is. We did have this big dip here back in from last July to October, and that was a decent correction, and it wasn't really bought up super fast. I mean, it was at the bottom, and then it's kind of felt like a wave three up into space here. When we just kept going higher and higher. At the time, everybody kind of thought it was like this would be the limit of this wave five on the smaller scale, and then indexes were going to turn lower. But that didn't happen. Of course, we kept climbing. But sorry for jumping around a lot. But as you can see here, as it finally petered out here, this sort of wave three into four and then five. The big question I had in my mind here was like, where does it stop? So I guess going back to the 2 hour chart, you can see that we've got some. Sorry, I keep jumping around here. I'm trying to scale it. Here, I'll add a laugh track here. Hopefully it's at least entertaining. All right, so at least I'm laughing. I don't know. So it's kind of like talking to myself when I do these things, So, anyways, feel free to participate in the comments, or if my jokes suck, just please let me know so I can work on them. Anyways, so this ending diagonal here is we're starting to see these counts. So we get like usually 5 waves within. So 1, 2, 3, 4, and then ultimately the high of 5. Well, there's no guarantee that this is actually going to happen. At least from the chart pattern here, it looks like it's going to happen. And I guess what I would say is like from a charting perspective, there is, I guess there's something to be said about symmetry and longer term patterns. So we're looking at this, megaphone pattern here. Typically, what you would see is this march up to space, really like about 6,000. That's I would say like there's a clear path for it, but I don't really know if it's going to be a straight line. I just think that it's going to be a little bit more of a I think that's going to be a little bit more of a slow slog. Again, looking at volume here, you can see that at the 2 hour level, there's a lot of knife catching going on with this, and then also, sorry, adjust my mic. Also, we see here when the Japanese carry trade fiasco happened here. There's just a ton of volume trying to catch the knife. If you also notice here that's where the JPM collar puts are for this quarter, so that I think that generated a lot of money that needed to change hands just for hedging purposes with dealers. And I also think too that this spike up that we had that recovered almost everything right away was sort of like a dealer driven type of move, where you see a lot of the dealers always have to take the opposing position. So if everybody's buying puts, the dealers have to take calls, or they have to buy mini futures in order to hedge all that. So what that can do is that can create a V-shaped recovery if all of a sudden the selling dries up and the dealers need to essentially get that gamma off their books, or their all their futures contracts off those books. So I guess suffice to say here that this last leg up, you can make the argument here that you're seeing a lot of these ABC patterns. So these and typically you'll see a series of 5 of them as it marches along here. So like I guess the big question for me is what happens next? The S&P today has sold, I guess you could say, off of this trend line hit, and this is the third hit that we have in this channel line. If it can't break out of here, then the bullish case needs to be on pause for a bit. It's also crappy seasonality with September and October for equities. So if people think that this is going to keep marching up without any challenge, I think that's probably a little short-sighted. I think that if we're looking at volume here, we do see a lot that is bears are trying to keep the indexes from climbing higher and higher, but also within the confines of this sort of pattern here. So I would say, because it's Friday and we haven't really seen anything yet, I mean, there's still a couple minutes here before the bell, but we haven't seen any extreme volatility. And it also too, I think it's quad witching. There's a lot of gamma. There's a lot of risk out there for dealers, and also for just big institutional traders. So you see a lot of that defended. So also some things that have come up is you see declining volume overall as this ascends, and that's typical of you can kind of see it here too with this big push up. You can see that there's a divergence, and normally when there's a divergence, you get that roll off. So what I'm thinking here is you might see something like this, where it will test this trend line, probably bounce up, and then potentially hit down here by this point of control for the range, which is about that 5,500 level, 5470, that kind of thing. So that seems to be, or 5460 really is the 0.786 retracement. Excuse me, retracement. So I guess if that does not happen, there's a different scenario. So that is, I guess, the bear scenario that you can, I guess, let me finish that here. Sorry, let me change the color. So even though the degree is not correct, I guess what I wanted to highlight with this is typically when you see these sort of patterns here, they always return back to the prior degree wave 4 low. So in this case, that would be like the 49.26. Now, when that happens is not necessarily clear yet. Yeah, again, we also have an election and just crazy market behavior lately. So if this does break down, let's say we see something like this, then there's a good possibility that it's not just going to test the trend line down here, but it's going to expand beyond. And that would be, I guess you could say, like a proper C leg here, if this does turn into an ABC. Now, I would say this is a bullish pattern. So I don't want to discount the ability of the bulls to just keep jamming everything higher and screwing all the bears. The bears are just gluttons for punishment. They love to just get walked all over, and I don't know why. The markets are really high, but I also think that some of these big players are running low on inventory to sell. I think that that's another reason that we might see some sort of sell off here with market sells to push just equities down in general, is so the bigger players can reaccumulate. We didn't really see any accumulation here. We're just seeing distribution, I would say, just by the look of it from the volume here. There's still a decent amount of red on this screen, and not a whole lot of like solid blue bars, except for when you see these rallies. And you can see here on the left hand side of the volume profile that there's groupings of buying. So you could see that in this sort of zone here, this like 53.40, 53.50 zone, that there should be some decent support. But you can also see here that there was a lot of selling that we saw here at what looks to be the start of this last series, this ABC series up. Now they're all different, degrees of time, but I guess long story short here is that this is still like this ascending wedge is a bearish pattern. But if it's a bearish pattern within a larger bullish pattern, then that actually gives us a little bit more confidence that we can trade the pattern pretty well. And that's where I'm still a little hesitant to add some longs around here. I'd like to see some sort of pullback. I do think we'll see something like this where it just continues up, but after a small pullback to maybe like the 55.70s region. And why it's important to at least try to understand what the possibilities are, because this isn't a guarantee either. So we could see, again, this is the bullish case, but the bearish case is that once it hits this trend line, the trend line breaks down. And if we run into this, let me change it to red. But if we turn that into what the options are, then you could see like a back test of the upper trend line, and then you could see something like this. And the reason why that might be like a potential stopping point if we see that scenario. So like let's say this 56.60, that would create some sort of head and shoulders pattern here, and also fool everybody by making another sort of smaller wedge pattern within. I always try to look at it like, the people that are trying to manipulate markets with market sells and market buys. The issues that you typically see is that there's a lot of jockeying for position. So you see a lot of like stop hunts, and you see a lot of just like crazy price action. But I guess I still want to call out that the biggest concern that I have is just the declining volume, and you need high volume if you're going to support a continued move here. So just to kind of reiterate, we do have a volume divergence here, and then we also have a volume divergence for the last rally, and it really kind of comes down to, I guess, exhaustion, right? So is there buying exhaustion? Doesn't really seem like it as of yesterday, but if you look at something like, let's take for instance a momentum chart. So this momentum chart here, this just has a bunch of moving averages that act as like a kind of like a rubber band. But I use this chart for different purposes. One of them is the DeMark indicators, and what I like about these is that, so this is the daily view of the S&P, but these DeMark indicators, anything of like a 9 or A13, that typically means that there's buying exhaustion. And this is at the chart level too. So this is like your daily sort of level. And I mean, it's not that hard to kind of reproduce it. You just need to count the number of bullish candles here, all in sequence. So you can see here that, we're getting pretty close here. We did have a couple of, at the daily level, those of you who are candlestick enthusiasts. Yes, they're out there. Hold on. Let me do their little laugh track. I mean, I think the laugh track is funny. I think it's a good ad. Anyways, so you can still see the same. Trend line here, and what gives me pause here is that these are bearish. These are bearish sort of signals. So this is like a hammer up here. Even though this is a bullish engulfing candle at the daily level, we still had it like the day after the Fed made their announcement. But the day before that was like a shooting star. So it's kind of like an inverted hammer. It's typically like a reversal type of candle. But again, not a guarantee, but considering how today is Friday and today's the last day of the week, um, we might see a completely different program, or algo sell program for next week. But there's really nothing to there's really nothing to nothing to confirm that at this time. But typically how these things work, we go back to the smaller time frame here. Typically what you'll see here when we zoom in is like the beginning of the week, like if it's going to be a bullish week or not. We have had, I guess, 2 weeks of just bullish behavior here after this, short little sell off here. But I guess, yeah, long story short, guys, I wanted to start off with the S&P because I think it's probably the easiest one to cover. It has all the hallmarks of like a bearish pattern within a bullish pattern. And if we did have another, let's say, over time here, let's say this actually was the top for a while, it's still a 4% move down in order to test that line. And if you're in some sort of leveraged funds or options or whatever, that's still a very nice, healthy move that could be very profitable. If this ends up being an irregular B wave top, and we end up just seeing the rest of that C leg here, potentially you could even see a 14% drop. And I think that would scare a lot of people and get that. And we probably see some accelerated selling. However, still not a guarantee. So how do we plan for this? The plan, I would say here, is just to try to be smart about your buying. People like to buy more than they like to sell. And going short is risky because markets can go up a lot longer than you can stay solvent. I'm sure you guys have heard a quote like that in the past. But what I would consider a good way to trade this is like a bifurcation point sort of identification. So the last high that we had, we just talked through that this is the third connection point on this trend line up. The fact that it didn't breach the trend line last night with futures is a little telling. That kind of tells me that like the buy energy behind the scenes here, like I said before, the volume is declining, and we're seeing a divergence. So, and there's also some buying exhaustion. So I would consider that high here that we just put in the latest and greatest bifurcation point. And what I mean by that is most likely, because it did not make a new high, we're gonna hit this this back trend or this back trend line here, and then attempt to bust through, and that's at the 55.60 level. But also, if it does exceed that new high that we had, then highly likely it's going up like this, and that should be towards the end. And I think that there's a lot of people who have this last couple of months charted differently. I think this is, we've been in a bull market for a year and a half or a year and a little bit more than that. I guess, the issue with that is like, what comes up comes down eventually. And, if you're holding shorts, I would say just be patient. Even if the market shoots up here to about 6,000, like the PEs are so extended and all these companies are on shaky ground with recent earnings, and, they can't really, yes, there's a lot of revenue and things, but earnings per share is down. Customer subscriptions are down. If you think about certain companies, even though Nvidia has been crushing it with revenue, they still got beat up pretty bad with their last earnings report. So with that being said, there's a lot of companies out there that are they're still putting up the numbers, but not exactly the numbers that give us confidence for growth. And if they do push it up here to this like 6,000, I think that's probably the point where we see a larger market reversal, or a pretty big dump here, just because of the longer term implications of this pattern. Now, I mean, I've been charting for probably about 17, 18 years now, and every time you see this sort of sustained bull run here, it always gets corrected, and everybody's always taken by surprise when the things are screaming, sell or get out, or try not to enter in with some heavy positions. I can't tell you what to do, but what I can do is I can at least offer some sort of suggestions here on what might be the next possible path. Now, I mean, everybody hates a bear market because it's impossible to, not impossible, but it's it's problematic when you want to try to figure out like where's the top. So like, do you sell the rip and buy the dip, or like how do you play it? That still remains to be seen. We don't know. We're not exactly in a bear market yet, right? We're still in the middle of this pattern here, and I guess one other thing for food for thought is that if we can see this pattern pretty clearly, others can see it pretty clearly, and that's typically when you see a change. So if this looks like a very obvious sort of, yep, it's absolutely going to 6,000, like, it's this ending diagonal, that kind of thing, you can drone on about it, but that essentially gives you that confirmation bias that is unconfirmed. So one of the things that I would say as a trader, or a market enthusiast per se, is you want to kind of get that, you want to like shake that out of your mind. You want to kind of trade with them, not trade against them or try to be contrarian, because the trend is always your friend, and being a contrarian is expensive. And if you don't have deep pockets to be a bear, and you don't have the patience to endure continued upside for months and months, you will run into the problem where you're gonna like psychologically get in front of yourself and try to time buys and sells, maybe if you lose some money, or revenge trade, that kind of thing. So I guess what I would say here is try to think about it like your setup here, your trade setup is going to be on the high side, with a reliable pattern here with a third trend line touch. That's probably a good sell. So if you have longs or whatever, you want to cash out in the green. Yesterday we cashed them out right up at about like 57.20, somewhere around there. Or no, sorry, a little bit lower than that. Like I'd say like 57.12 with our positions using SPXL and TQQQ for Nasdaq. So we're able to bank some nice profits here, but also now we're just kind of waiting to see what happens. And again, this kind of ties back to this whole bifurcation thing, where the real takeaway is that if we do make a new local high here, that sort of confirms that we'll be headed higher, and highly likely we'll see a couple more percent. But after that, I think that's where we take a real big dive off the cliff here, because this is a long-term bull cycle ending pattern. I guess if you have a difference of opinion, I'm happy to entertain it. Lobby me, try to convince me. I'm always all ears. This is not a definite thing, especially when you're just doing market forecasting. Everybody has a different opinion, and I encourage you guys to think for yourself and try to challenge what people present as like a slam dunk sort of case. I can't tell you how many times I've been in front of a computer thinking that, yep, totally slam dunk, like it's going to go short, and then it just rips up to the moon, and there go all your puts. So anyways, long story short is the S&P here is getting close to this like ultimate sort of high, and I do think that there's room for a pullback. If it is kind of small like this, I think that's probably the easiest way to try to trade it, but I still wouldn't go long here right away. Like right at this juncture, I would kind of wait to see if it breaches the trend line. Highly likely it does, and then if you see the back test, and then it also fails on the back test, then you have confirmation to go short. And you only lose a couple points if you play it like that. So your entries, okay, so maybe like I'd say 2.5% maybe from here. But really, what you're trying to do is you're trying to reduce the probability of a crappy trade. So if it does sell down like this and comes back up to retest and then gets rejected down, right around here is where you want to go short, and you can set like a stop limit buy right here in order to add those shorts. So do like a GTC order or something for 90 days in case it takes a week or two and you don't feel like looking at it. But ideally, that's the good setup for a short trade. If you wanted a lower probability, or not lower probability, but if you wanted a slightly more risky short trade, go short up here and then cash out here at this bottom trend line, or hold. But I do think that this is the fifth connection point of this ascending wedge here, and we just don't have confirmation yet whether it's going to break higher or lower. But I'd say it's probably 60% we head lower, and 40% we break the top and head higher. And I do think that this will be a fast sprint up here if it does break. But all right, so that's enough for the S&P. We spent a lot of time on that, but that's sort of like encapsulating a lot of the different, a lot of the other equity sectors, or not sectors, a lot of the different equity charts. So sorry, before I go on the Nasdaq, let me show you. So let me do like, here we go. So the Dow kind of stopped right around this 42,000 mark. And if we kind of zoom out here, it's still got this sort of same pattern, but it's more like a channel instead of like a instead of sort of like the megaphone pattern. Well, I guess the important part to understand here is that this is also the third connection point, and now this is like a full five wave series. I don't think that the like I'm trying to get clues from the Dow here because a lot of the I think a lot of why the Dow is pretty high right now with its this upper trend line is because there's a lot of people moving into defensive sectors, kind of seeing that or not just defensive sectors, but like blue chip stocks and things like that to try to reduce some of their let's say risk with tech or really just try to bank some gains and let's say put it utilities or biotech or something like that because utilities and biotech are up today. So then taking a look at small caps. Small caps are also printing a similar pattern, but this is a little bit harder to read, just because this might be something where like the counts might be off. I mean, I don't think they're off, but I've been wrong before. But for the upside, you can see that let's say small caps could put in, I'd say limited upside, like 2355 or sorry, 2335 is about the A equals C level here. And even though that wouldn't really make a new high, it still could extend, of course, up here to this 2400 level. And I think that's probably going to be it for small caps for a while at least. And all right, let's go to Nasdaq. So Nasdaq's a little bit of a different beast here. Sorry, I have some crap in the way. Let me get it out of here. But Nasdaq is a little bit more. I would say it's a little weaker, but it still has the potential to outperform. I'd say there's a very good case here that following the same logic as like the S&P, if it does break out, then 22,000 is a realistic level, just like 6,000 is a realistic level for the S&P. If you're looking at the same patterns, it's still the same megaphone. We still see a lot of these ABC structures in here, and that is typical of an ending pattern. Like you would only really see difference or like different patterns, like let's say impulsive 5, 3, 5, 3, something like that in like a wave 4 where you see triangles. So anyways, with these sort of things, you would typically see five ABCs within it. So this is still sort of speculative here, where this sort of move. Let me change the color here. I can't see that at all. Sorry. So it's still the same sort of pattern that it kind of bounces within here, where you see this, B to C and ultimately to C to D, but it still didn't really break above this 20,000, and it actually kind of stopped right here. And I do think that that's big resistance. So right at this level, that's kind of where we see a bunch of tops. So we see at least 3. Technically, that makes it a barrier triangle right now. So if if I got rid of this upper trend line, you could see here, let's just do that. So you could see, this is a pretty clear barrier triangle, but in this case, barrier triangle really wouldn't be bullish. It would be bearish, just because it's, it's coming from high. At least this is a, typical bearish pattern here. So with that being said, I still think that there's probably a 60% possibility that we see this sort of bearish move where, let's say, Nasdaq heads up, let's say Monday or something like that, or maybe we see a squeeze in the last half hour, who knows. But I still think that we'll see a test of this low here. This like I mentioned before, the wave 4 or the prior degree wave 4 low. So that would be a test of this level here, about this 17,000. I'd say is pretty close, or 16,975. So if that does happen, and this pattern or this lower bit of the pattern is breached, and I have seen this before, where everybody thinks it's going higher and higher, and it's going to make that 5th connection point in the final part of the pattern. but then the bears sell it down before it gets there. Or like let's say you have a bunch of limit orders right at that level or slightly before. There's probably going to be a lot of sell limit orders, and the dealers don't want to have to buy the top to hedge their risk. So they might not give people the opportunity to go short at the absolute highest point. They want to try to confuse and harvest your trading profits from you. Separate your capital from your pocket, or I don't know, whatever. We'll just do a laugh track instead. All right, I don't know about you guys, but I'm loving the laugh track. I feel like it's very, it helps me out of a jam when I make a crappy joke, which is often. Um, anyways, okay. So for the Nasdaq, hopefully I covered it all with the S&P. I want to leave some time for questions, but overall here, I think this 20,000 is a really big barrier, and if it's exceeded, then we could certainly make the case for 20,500. But I think it's just a little bit weaker than it probably should be. So I mean, everything in the market is speculation, I guess you could say at this time. So it's looking at the volume, like there's been really high volume overall. There's been a lot of buying and selling. It's a little bit of a toss up, but there's still this like positive sell delta down here. And I think that, there might be some larger players that are kind of trapped right around here, thinking that we would have had a fifth leg down. I mean, I know I was fooled with that. Same thing with a couple other people that, that are traders with services and things like that. By the way, if you are enjoying today's program, I'm gonna add my link here, do some shameless promo. I'll put it in the chat. This is my service. If you're not part of it, take a look, ask some questions. I'm happy to entertain any questions here. I want to try to keep doing these. I'd say on Fridays if I can. Like I said, I've been getting some good feedback, and if it's helpful for you guys, then that's great. If you haven't, if you don't know who I am or what I'm about, take a look at the link. There's a 45-minute video there that kind of sets up the service, what it's about, what it does. And hopefully you get some value out of it. All right, so that's the shameless self plug. Now back to the regularly scheduled programming here. Okay, so we already talked about the indexes. I think that kind of covers most of that, and I think what we might see for next week. Now let's take a look at like semiconductors. So this is one that I've been chatting with some other well-versed people in trading. It does look like this head and shoulders pattern that's developing here, and also this looks like this symmetrical triangle, but it's also a bearish pattern because it's happening as like a B wave. So typically, when you see triangles like mid pattern like this, it's typically a B wave. If you see like a triangle pattern towards the end of at the end of a 5-wave structure, that's usually the wave 4 into 5, and you might only see like a slight low for that. But also this can double as a like a pennant, right? So you could see if this does actually materialize, and they don't just try to drive it up like crazy. This is kind of where I'm getting my clues from here, because semiconductors were really hot, and now not so much. So I mean, you can just kind of see it where like, yeah, you're getting a little bit of buying here and a little bit of a little bit of participation from Nvidia now, if you look at that chart. But it's still somewhat similar, where you see this sort of triangle or corrective structure, which is usually just a continuation. There is a bullish case here for Nvidia, and if it does get up to this, like let's say 125 level, and you move back to stocks, then we might see like a higher high. We might actually see like a not higher high. Sorry, we might see sort of like sorry, one second. You might see something that's just a channel. So sort of like how small caps are, where you see this channel upward. So right now, just to use this as a proxy here, right now we're Nvidia and stocks are kind of doing this sort of symmetrical triangle thing, but there's no reason why it couldn't break out like small caps, even though small caps are pretty erratic. Nvidia can also be as well, but there's really no catalyst on the horizon here. Now that we know what the Fed rate is, or what the Fed rate change is going to do, we don't really have very much guidance after that, or at least, from econ news, we have to wait for unemployment and things like that. But it doesn't really impact semiconductors very much. So I guess to summarize here, really what we're looking for is a bottom trend line break, because to me this head and shoulders pattern is it's very clear. And once you start to see these head and shoulders develop and that right shoulder develop, again, it might still be a little premature, where we could have let's say you have a slightly higher high like this and make that channel and then drop like that. That's certainly possible. I think that if it's going to happen, it should happen sooner versus later, because technically the last 2 weeks of September are the worst for the entire year for seasonality for the market. So I don't really think seasonality has been playing out so much this year. Like the whole sell in May, go away kind of thing. Like that didn't happen this year. It didn't really happen last year either. So like seasonality is important, but it doesn't mean everything, right? So it's just one thing to consider. Just like the triple, witching thing that we have today, just with a little bit of, volatility here. So that's kind of what semiconductors look like they're doing here. Is I would look for maybe like another test here. This purple line is the 50 exponential moving average, and the turquoise lines here are the 200. That's actually getting pretty dangerously close to the death cross. For those of you who don't know what the death cross is that when the 50 moving average dips below the 200 daily moving average, I guess exponential and exponential, or simple versus simple. That's called the death cross, where a lot of longer term traders will start to dump their shares, because that's like the technical signal that there's weakness. So it's kind of like how Buffett has his own indicator where there's let's say GDP to market cap, that kind of thing. It's sort of like that, only just another like bigger macro sort of thing, where some traders will buy when there's a bounce at the 200 daily moving average. Some will sell when it goes through, that kind of thing. But the inverse though is the golden cross. So when the 50 crosses across the 200s, then that typically means overall it's headed up bullish. But I would say in this case, now that it's been declining and kind of doing this like pincer move, I don't think that I think it's coming. I think it's coming soon. And it could be another signal for the overall market, because semiconductors were really driving a lot of these things, but now they're kind of petering out. And like you never really want to short the market leader, like the market cap leader. But in this case, in my opinion, charts are like the sum of everything for the markets. It's all the executed volume. So you don't have to worry about dark pools. You don't have to worry about any other crap that typically, gives people analysis paralysis. You just have to look at the volume, learn how to read it, kind of triangulate your volume profile for the day or the week or whatever, and your daily volume just as a sum. So once you can kind of figure out how to align those, and then you can kind of read that, where if you're looking at the 2-hour time frame, that's not exactly the easiest to discern like where you have a lot of volume or not. But you can kind of see here that this average is declining with volume here in NVIDIA. Now that doesn't really scream accumulation to me. That it just kind of feels like there's like on this rally up, it's just the volume is declining in general, because there's just buying fatigue. Everybody's been buying for a year and a half plus. At some point, there's not enough dry powder left, or you're just trying to catch up, and people get lazy. When markets are topping, they think it's just going to keep topping and keep going until it doesn't. But again, I'm not trying to scare anybody. I'm not trying to say, doom and gloom is here. The only thing I'm saying is that there's going to be a point where the normal buy the dip isn't going to work anymore. And I do think that that's coming sooner versus later. All right. So that's NVIDIA and small caps. Let's talk about the yield here real quick. So the 10-year yield, this guy, let me also pull up the dollar. The yield in the dollar kind of seem like they're bottoming to me. Now that the market got what it wants, now I think that bonds can be traded successfully again. I don't know if that's the right way to put it, but I mean, if you look at these longer term sort of views here, the yield has had the yield has had a pretty nice rip down from this 4.74 range, and if it goes from like peak to trough here, it does look like it's coming down to like the end of like a wave three, and I might be wrong about that, but I'm still expecting some sort of bounce up higher to about maybe like 4%, and then possibly another test of the low. I think that there'll probably be another catalyst for rates increasing, maybe like a hot CPI or something, or unemployment that let's say unemployment comes in low, something like that. Something that's like generally good for the economy. So essentially, the Fed cuts rates because they're seeing weakness and things like that. But ultimately, I guess what we see, I guess, in aggregate is that the equities would go down, bonds would go down as well, just because with the rate cuts, that signals just weakness in general. So even though markets are like rallying, there's also a sort of like a component of trying to fool people into buying the top sort of thing before it gets ripped down. And I think that like the rate cuts and things were all priced in here, especially if you're trading bonds and yields and things. But just what we were talking about a couple minutes ago, now we see that the death cross here for rates. I have seen it before where the 50 kind of does this thing where it swoops up one more time and then takes a digger. But that could be where you see like maybe like a higher wave 4 here. But we are getting pretty close to the point where this whole pattern looks like it's playing out. And like I said before, the higher or the previous degree bottom of the wave 4, that's where you'll always see a test of eventually. So whether that happens now, I mean, that might actually be a really long wave 5 or something. It's possible. So what I'm looking for here is just a small pop up here in like if you have TMV, like just a small pop up, and it could still be a good trade, but overall I'd say I'm flipping to like TMF here to play short rates as soon as we have this little bounce here. And the dollar, I think, needs to confirm that, because the dollar and the yield always trade as a pair. So with that being said, I think let's wrap up that part. Let's talk about some gold. So gold, in my opinion, I mean, look at where gold is at right now. We have, let's take a step back here and look. So this long term is a cup and handle pattern, and we just kind of went through this handle, this consolidation zone for the last couple of years, and now we're finally in the sprint higher. Well, it looks like here that there's a pretty clear. It kind of looks like this is the wave 3, and like it's not quite done yet. Like I'm kind of thinking here that this might be the top of like our wave 3 for gold. So this 2650. I mean, that's pretty high for gold without having any sort of what you call like any pullback. But it does look like we do have this pretty solid structure. So if you're trading metals like gold, this really does look like we're kind of at a top here. And if I take out all the drawings and all the crap here and just look at it for what it is, there's definitely a cluster here. And also too, you can kind of see a nice like triangle pattern here where it looked like a pennant, right? Not necessarily a flag, but just a pennant. And then we see this consolidation range up here, which is, in my opinion, a very clear wave 4. If I add the lines back in, this does look like a bunch of just bunch of junk in here, but I assure you this came out of a pattern from a book. So here it is. Yeah, so it kind of looks similar to this, right? Where you see this like a flat that turns into a zigzag, and it's like a more complex sort of correction. And if you look at the actual chart pattern here, if I do the two hours. And the reason why I'm trying to spend time on this is because I do think that if you know where we're at in the larger wave structure, it helps you significantly when you're trying to place trades or you're trying to come up with like entries and exits. The exit, I think, if you were holding long gold and let's say you've been holding it for a while, Again, I can't give advice. I don't want to get sued, and I don't want the SEC to shut me down because this is how I feed my kids. But so like, wait, hold on. So laugh track for that one. I'm gonna do it. I'll do a different one. There we go. It's it's here to stay, guys. It's here to stay. Anyways, so like if you're long gold, this is a really good spot. Just because I feel like um, you can make a clear. Oh, you can't hear the laugh track. Damn. All right, I'll fix that for next time. It's just in my other speakers. I'll see if I can fix that. But thanks for the heads up because now I just look like an idiot. But you can see here this wave five structure within. So this kind of looks like a three. So you see this 1, 2, 3, and then 4 and 5. This looks like an extended five, which can happen with metals. It can also happen with commodities. Typically, you'll see an extended fifth leg with commodities and um, metals and forex things like that, where the longest wave is going to be wave three for equities. At least that's how it's been for years and years. I'm not really sure why. So if there's any well studied individuals here in wave theory and some of the causes, please let me know because I find that interesting. Okay, so I think that's at least what it looks like for gold. It looks like that it's just a wave three here, and don't pin me down on it here, but I think it's probably getting to the point where it's like gold is due for a pullback, and you would see that once the rates bounce. So if you have like a wave four, like I was mentioning before here with the yield, so if we do have this like wave four move here, I would definitely expect there to be a buyable dip for gold for sure. Now I don't really know if this is going to happen, like this long, wave five down here. It kind of looks like it will from like a symmetry perspective. And like I mentioned when we first started, look for symmetry with these longer scale or longer time frame patterns, because the symmetry usually is what the like if you have to force a pattern to fit with wave theory, it's usually not the right. Usually, it's not the right pattern. Or like it's a little too soon for another wave, that kind of thing. Um, so let's just take a quick look here, like at silver. Just some more metal action. Um, Not heavy metal, unfortunately. We could make heavy metal jokes. Okay, I'll work on that. That's my homework for next time. Um, so just kind of taking a step back here with silver. This is a relatively new ticker. Been looking at here, but kind of looks like a barrier triangle. Now I still think that with like a wave four in let's say the dollar retraces back up and the yields retrace back up, that's going to put some downward pressure on metals. So if we do see this, let's say this extension down here to like let's say 25 for silver, yeah, I think that's certainly a viable sort of dip there. And if you're wrong, then you can just hedge short and wait out until you get a retrace or something like that. But that's still probably a couple weeks away if it actually does play out. So I'd like to see if that actually works out or not. The other one here to look at is oh, that's a mess. Hold on. Clearly, I was working on this one earlier today. So this is also a very similar sort of view here, but silver was higher, of course, and now it's going to try to, or at least I think it's going to reverse here. But I think that copper has a lot more upside potential, at least for now. I think at the smaller scale here, what you're seeing is like an A equals C sort of channel that's developing. So right now we've got this test here of this 4.37 area, and we could migrate a little higher to like a 4.45 or even maybe slightly higher than that. But I do expect it to come back down here and make this sort of like a longer term ABC and kind of complete this C leg and also bump into this bottom channel. So it might do something, let's say like this, where you don't get the clear or where you don't get the final sort of move down. You could also make the argument that this is a 5-wave structure. But for right now, I just had it labeled as ABC. Long story short is, once we do hit this point of control down here, I think that there's enough buy delta to really support a strong upward move. So that's that. So last two here I'll touch on is Oil has been a bit of a mystery, but if you look at the longer term views, not really. This is still a continuation pattern where you see a lot of oh, and sorry, I must have there must have been a contract change. My lines are slightly off, so please give me a pass on that one today. So there's a lot of junk on this chart, but the main thing I wanted to show as I zoom out here is just that there is this could be considered like a B wave corrective pattern. And the reason why I think that you might see this is because now what we're seeing, if we zoom in, and I want to do the 2 hour. If we zoom in, we're seeing a multi-day back test of this lower trend line, and this trend line's been in place for years. We're talking years now. so like just looking at that, and even ignoring the negative oil value that we had, let's say back with COVID. I don't know if you guys remember that where it went oil went negative from some derivatives hedging and stuff like that. So I still don't know what actually happened with that. Did they have to pay people to get the oil? I don't know. But anyways, what I think is going to happen here is that I don't really know if oil is going to survive this back test. I feel like you see a lot of this downward pressure here on not downward pressure. I mean divergence in volume and also with a price incline. So if you kind of stick to the rules here from a charting perspective, this to me is a good indicator that kind of like equities, we're going to see some sort of reversal soon. Right now, my fund here is short, or like 2 to 3 short versus long, so we still have a net long bias. I'm trying to see if we can get to the 72.40 level before I add another short hedge to make it 1-to-1. And we might actually be able to get out of the oil longs at a profit, but it's just not quite there yet. But I guess to suffice to say that this is a key area for a retest here for oil, and if it can't deliver and we can't get above it and stay above it, then I think this turkey's cooked for a while. And some more like macro econ layers on top that I guess we can we add on. People would always ask, but why? Why is it falling or why is it rising? Well, I think about it. Like if we are headed into a recession, the Fed just cut rates, which is acknowledging that spending is like the volume of spending is down, supply chain isn't as much a concern anymore. Luxury goods are down, autos, housing starts, that kind of stuff, just because the rates were high, and that was starting to take a bite out of stuff. But now that we're seeing confirmation that the Fed is seeing this sort of data, and they also have their own secret data they don't share with us. Of course, everybody's got their own internal data that kind of tells them a little bit more of what's available to the public, just like any company does. So just looking at this from an arm's length distance, if you do see a slowdown in the economy, they're going to put pressure, that's going to put pressure on energy because we're not consuming as much. So if we have, especially with more oil and gas being produced in the U.S. than in other times, like significantly more, we're also having like a glut of supply. And if we do see the decline here, with just let's say unemployment ticks up even more, then you probably see oil head a little bit lower. And like I said, there's this multi-year consolidation pattern. It's going to break the pattern sooner versus later, and it already did break the pattern. Now it's just we need to confirm whether this is going to be a longer term short, or if it's going to be something where you certainly don't want your long stuck at the top, or at least close to the top, but close to the bottom trend line is fine. All right, so one last touch here. Natural gas. I want to leave some time for questions. Natural gas is today is the day, I think, ladies and gentlemen, where you finally see this sort of breakout here from the consolidation zone. I don't want to say anything too fast here because again, still seeing the same thing, seeing a divergence in volume. But now that it's broken this upper trend line, I think that you could see something like this maybe where you see like a continuation up and it actually does become a wave 3. However, it did not retrace the normal 61.8% of whatever this this first move was. So maybe it's maybe it's like a double bottom. I think that's realistic here for gas. So if you're underwater on oil, I would say just stick it out, have some patience. All right. So any questions? You can put them in the chat here. Hopefully this was helpful, guys. If it was not, then I'm sorry. I will get better. I will have better jokes, and the laugh track will be included in the next broadcast. So, like I said, Fridays, I'm thinking that I want to try to do this a little bit more. Yeah, no problem, everybody. If you did enjoy the presentation here, I think that just kind of recapping how markets go or how markets perform this week, and then try to see what the setup's going to be next week. It just if it's an hour, just to recap. If you guys make some money off of it, awesome. That's really all I care about is being able to I guess secure your own financial future. All right. So Jake, you had asked for shorting. So I would say for natural gas, I don't think it would be a good time to short. I think that what you're looking for is a breakdown with a back test. So now that it's broken out of the top here, typically what you'll see is like a continuation, kind of like this blue line shows. Not very often you see something where it only goes up just a tad and then falls right through, and you see something kind of like that. I mean, you could try it. I think it's probably a lower probability trade, just because, it could bounce back. Natural gas does make a fool out of many people who trade it, including myself on occasion. But I guess realistically, just from a technical analysis perspective, once it breaks beyond a trend line like this, you see a little bit more gas behind it before it does some sort of back test, and then either survives and heads up, or if it breaches lower, then that's where, let's say you set a stop for let's say a couple points below where like a couple points below, and that way if you're wrong about it going up like this and this blue line doesn't play out, then you can still add your shorts at a lower risk area. Does that make sense? So it's almost like you're trying to time or you're trying to move up your stop to go short, but you still want to have this barrier in mind. Any other questions? Let's see how markets fared today. All right, so the last question I'll have is, so this was helpful. Good. I hope so. All right. I'm seeing some people drop off. So, yeah, it looks like operations expiration was another nothing burger. So we still, there's still consolidation all day. But yeah, I mean, quad witching yet again fails to deliver anything of any value to anybody except for just big numbers. So, all right, guys, thanks a lot for joining. I guess we could probably wrap up, and yeah, maybe I'll, see you next week. Thanks, everybody. Bye.